Hi, it's Steve and Joe from Freshagenda. And Steve, this week we've got a bit of an update on our latest global dairy directions outlook, as well as the GDT results and, of course, the chart of the week.
The famous chart of the week. So it's been, I think, 4 weeks since we did this. We've relocated back to Victoria after a couple of months of bliss in Queensland in a completely COVID-free environment.
It's still blissful here.
It is. Speaking of COVID, so look, I think the what's changed in the outlook, not a lot. COVID's got more severe, and I suppose what's been apparent is the restrictions have increased in severity. So we've dug out a new chart, which I'll probably be using quite a bit in future. It's tracking the seriousness or the severity of restrictions around major regions. So while we've got case numbers, which we don't show here, which have exploded way beyond the first phase, the restrictions are nowhere near what was imposed.
Yeah.
And it's unlikely they will be.
Particularly that red line of Eurozone, given what's going on there, that's interesting, isn't it?
I guess the political juggling act that's been going on the whole way through this, this argument of economy versus health, or that's favouring the economy in those regions, and that's where it's going. But it is probably meaning that what we're going to see from here is not so much a big restart, or it's not this sort of big lumpy effect, but probably more what we call staggered restart. Going back to when this first kicked off. But there is a surge of retail, and that has certainly helped firm that market.
And I guess the other thing that we've been talking about for a while is that there isn't the government assistance out there this time around for areas that have locked down or with this COVID surge going on. A lot of that's tied up in Congress or in the EU Parliament. So, again, a lot of pressure on discretionary spending for consumers in some of those markets.
Yeah. The other thing is that weather's starting to impact milk growth. Two things. Southern Hemisphere is drying out quite a bit. Not chunks of New Zealand, which have had a bit of a drink.
Yeah.
Still seeing a bit of Waikato exposed there, but it's a lot better than what it was. But South Island is a little bit more dire. But see, the locals are still saying that really isn't going to change the risk in summer. That there's still a subsoil risk.
Yeah.
That things will dry out once we get
dry out quickly.
And the La Nina is certainly entrenched in the system,
which doesn't help New Zealand, and it's supposed to help Australia. We'll come to that later.
Yeah. South America's got this nice brown spot there where most of the milk is, or the most important milk growth is occurring, impacting feed costs and having an impact on global feed costs. So that's also impacting the way in which milk is being used. And impacting external trade, with Brazil a bit more hungrier for whole milk powder. So our outlook summary there is a little bit different. Some of the arrows have changed direction. Not a lot has changed in the tone of this, but the fundamentals are a little bit different. So again, we're not trying to tip prices here or pick prices. We're saying what the overall add up by commodity, by region, is based on some of those, the fundamentals that have driven value in the past. So, but some things I'd like to call out. The drop, the big correction in US cheese, is that enough to stimulate growth in demand or sufficient growth in demand? So here we go right back to the 90s, comparing the change in retail prices year on year. What I found is that the actual change in prices that consumers see is more impactful than the absolute level of them. So not such a high price, low price. It's when prices change direction and with some serious note that we do see a change in demand.
So indicative of promotional activity.
Yes, correct. Absolutely. So prices are going to dip from here in this chart. We'll see the retail prices follow down where wholesale prices have been in coming months. And, does that pull that blue line, that disappearance line up sufficiently to help bolster overall demand as we go forward, because the other part of the cheese market is going to stay weaker for some time.
Yeah, given the food service exposure.
Yeah. This is critical because US is building milk supply, and with the cheese market's going to absorb enough of that to avoid more skim and butter production.
Yeah, so big impact on export availability from the US.
The other thing which is more than apparent is the disconnect between the traditional turnover-related fundamental that skim milk powder values have tended to track a turnover index. There's a disconnect there. We think values are now more driven by the US, by the availability in the US, and its more competitive position with currencies. The weaker US dollar has certainly seen a lot of share change, and that's probably the cap on that market, despite the fact the balance sheets got tighter.
Yeah, so it's that marginal competitive supply out of the US, which is interesting.
Yeah, because if you looked at where turnover was at these levels, those blue bars, if you go back across where the blue bars were at that height in the past,
should be
pretty high values.
It's good value skim milk powder at the moment.
Terrific.
Get out there and buy.
And then the butter market. This is dealing with international butter trade into the developed world. Something we keep an eye on as to how that's impacting the draw on New Zealand product. So that's down a bit, not seriously, but it is down and it's lower. And lower prices we're seeing now is no doubt stimulating some of that demand. Again, is it sufficient to lift this up so that we don't see a prevalence of a excess butterfat?
Yeah, just given the economic situation in some of those countries, it will be interesting to see if it's enough.
The other thing in the background, of course, is that veg oil prices have gone up.
Yeah.
Due to supply constraints caused by the pandemic.
Due to the pandemic.
Yep. Okay. There's some highlights of our outlook thinking.
That was mailed to subscribers last week, so...
Yeah, this week.
This week,
in fact.
Time is a concept at the moment.
Yeah. Look, the other thing that's a big setting is the macro impacts. Just something to think about. I mean, the US dollar projection is fairly firm going forward for some time. So there's a big commodity cycle being invigorated here through those macro settings, the amount of money that's been printed, the inflationary pressures that are coming. And so that probably, it will change market shares, trade shares in commodity trade for, at least in the short term.
Sure.
Okay. GDT last night was one of the most positive events. I went back to see, because I think, we look at nearly all contracts went up.
Which doesn't happen very often.
Not happen. The last time it happened was early 2018.
Wow.
And before that, there was a couple of events in 2016 when the market came roaring back. 2015 doesn't happen. You see a solid green in our files. Solid green cells where all the contracts have risen. There's just one outlier here, which is an AMF contract. But apart from that, across the board gains were very good.
And we should say that contract went up hugely in the last event.
$500 in the last event, so it's just corrected.
Yeah.
So probably you'd say it's all green.
Yeah.
Just showing the relativities there. The demand was up. Demand was better than average in just about every case, which is what you usually see as a result as firmer prices. But the story again is how China dominates whole milk powder, skim milk powder, and this time butter. So that's what drives the results.
Absolutely.
When they're doing 3/4 of the buying. Chart of the week, Joe. What have you got?
Yeah, chart of the week. We thought we'd have a look at what's happening in Australian milk production. It has been quite strong through 2020, just as seasonal conditions have eased. But while we do have a La Nina, which means more rainfall, it has been quite hot. I think November was the hottest month on record for Australia.
October production.
So in October, we saw production was slightly down, 0.3%. And we're just also showing what the situation was like in November. We still got a very wet outlook because of those La Nina.
Just keeps getting pushed out.
Yeah, but also warm. So we've got drying conditions. Water allocations are creeping up.
Yep.
Water storages are getting a bit higher, but not the flush season that we were perhaps expecting and hoping for.
We were shaping up for, because look at those bars on the right, they've faded away to nothing.
Absolutely, yeah.
So it gets harder from here.
Yes.
And there isn't any milk price step up relief. So,
No.
got to say, there's been a lot of media commentary here that's been trying to goad some debate on, should we have step-ups? The tradition in Australia has been, it's not a tradition, it's simply a practice, that companies have a bit in the gun as they start the season, and you get to spring, and there's been in most years a lift in price, they call step-ups. This year that won't happen. The opening expectations about the commodity milk value, so noting that milk prices are about 50 to 60 cents higher than that expectation of commodity value at the start of the season.
Just for market mix and non-commodity products and...
Yeah, that's right.
Yeah.
That's right, a bit of added value.
Yeah.
So this, the dollar has lost 8.5 cents. At the time, the dollar was expected to stay around the mid-60s in late May, early June. That was the consensus around currency analysts, and they frequently get it wrong, just like dairy analysts do. So the gain of the dollar's lobbed 90 cents off that CMV to last week, and we're just above $5. So prospects for a step up are they're non-existent. Despite what the farm lobby thinks, despite what certain of the rural media think, I won't talk this into it. I mean, we've not only lost commodity value, we're also losing big chunks of our best paying export market in China.
Yeah.
We've covered that in previous weekly takes, but that is only getting worse.
Yeah.
And so the higher value that's brought through to ingredients is certainly being eroded. So that's a fairly sobering outlook for the rest of the season. So there isn't going to be any price relief, top line price relief.
Well, it's not apparent anyway.
It isn't apparent. We can't see where it could come from. Right. Okay. Well, that's all from us. Thanks for watching. We'll be back sometime soon. It's goodbye from me, and it's goodbye from her.
Goodbye.
Bye.